Hey guys, and welcome to the Trading Basics. By now you should have downloaded your MT4 trading software, and this video will go over the basics and the trading tools that MT4 software provides in helping us making our best trades possible. So when you open up your MT4 account, it should look like this. The first thing you'll want to do, I've already done so, is just move this out of the way here to give us more space here as we look at our charts. Now to open up a chart, you'll just click here. This represents just your most recent charts. This here is a full list. So we'll go ahead and open up the Euro US dollar. Okay, we'll maximize this for full viewing. So here we go. This is our Euro US dollar chart. We're looking at it on 1 hour. And the first couple of tools are these ones here, just different ways to look at the graph. So zooming in, zooming out, real basic. These three here represents different types of charts. So we're currently looking at a bar chart. This is the candlestick chart, and then a straight line chart. So personally, I like the candlestick chart. It gives a clear definition by color which way the market is trending. Okay, so obviously candlestick's filled in, market's trending downward. It's not filled in, market's trending upward. Okay, very clear. These buttons here, won't use them too often, but when you need to go backwards and look at historical data using the arrow key on your keyboard, you will want to have this icon not clicked. And that's what will allow you to go backwards and look at historical data. Okay, when it is clicked, that will auto go to the current trade or current time. Okay. This is the indicators here that MT4 provides. Now again, my training is designed to be very basic. MT4 provides indicators and other strategies that if you want to become a guru, if you want to really analyze the market and research it to the T, go ahead, feel free. But my personal preference, I like to keep it basic. I don't want to overanalyze. I don't want to overwhelm myself. So that for that reason, I keep it simple, keep it to the basics. Alrighty. The other tools you have here, different ways of looking at a chart, are the different time frames in which you look at a chart. You have the option to look at a 1 minute, 5 minute, 15, 30, hour, 4 hour, day, all the way up to a month. Okay, now this just depends on what kind of a trader you want to be. Do you want to be one that is really watching the market and is in a trade and out of a trade within 5 to 20 minutes? Well, then you're going to want to be trading on a 1 minute chart. Now, when doing that, there's not a whole lot of money to be made. You know, it's more about just making a quick buck, you know, maybe $20, $50, and just getting in and out. Now, for long-term traders, you're going to be looking at an hour, maybe even a day chart, and staying in a trade for anywhere from an hour to maybe half a day, trying to make more of a profit. Okay, so different strategies. It just depends on your preference and also your time. You know, do you have the time to sit there and hop in and out of trades all day long, making 20 bucks here, 50 bucks there, or do you have a full-time job, a family, whatnot, and you can only make one trade in the morning before you head off to work, and you keep that trade in all day long and making more profit. So just different preferences, different strategies. That's completely up to you, and we'll go through different strategies in which you can utilize both. But let's go ahead and get into the basics. So the first thing that you're going to want to do before making a trade is you're going to want to identify the trend. Okay, the trend is your friend. Now there's three different ways in which the market can trend. It can either trend upwards, downwards, or sideways. So looking at the Euro US dollar here, how do you know? Is the market going up? Is it going down? Or is it sideways? Well, at first glance, looks to me a pretty sideways trend. One of the tools that MT4 provides to help us know which way the market is trending is this tool here. Let's find it. Okay, it's here under Insert Channel, Linear Regression. Okay. You're going to go here to the bottom, the most bottom of the market, and you're going to click and hold. And as you go to the end of the chart, you can see we are in an upward trend. Okay, we'll do that again. So let's erase this. Let's look at, so we're looking at a day chart. So within the past, so this was going all the way back from September to now in an upward trend. If we were to look at a 5-minute chart, and we went from a couple hours ago with our linear regression, we would start and see that we're in a downward trend as of maybe a few hours ago. So you can often find a trend within a trend. Again, it just depends on you. Are you a short-term trader, in and out, or are you a long-term trader? So my preference is to do both. So how do you do both? Well, let's start over. So let's erase this last one. Oops. So we're currently looking at a 5-minute chart. Let's go ahead and look at a 30-minute chart. Let's zoom out. Okay. We'll put in our linear, actually, you know, let's do a 1 hour. So we're on a 1 hour chart zoomed out. We're going to go ahead and insert our linear regression. You always want to either start from the highest high or the lowest low. So looks like this is maybe our highest high. And we've got a nice downward trend there. So if we've got a downward trend on the 1 hour, and as we go to a 5 minute, go to the current here. Okay. So you can see there's our linear regression on the 1 hour chart. So now as we put in our linear regression here on a 5-minute chart, again, starting with the highest high or the lowest low. So here's our high. It's also in a downward trend. So when the two match up, well, that's better for us. That's going to give us a higher percentage of, if we put in a downward trade, more likelihood that the trade will fulfill itself. Now, always, the trend is always our friend. So we always want to trade with the trend. If the trend is trending down, then we want to put in a trade and take the market going down. If the market was going up, then we would want to put a trade in for the market going up. Very simple. Alright, so that's the first step in our basic trading, is identifying the trend. You want to be able to identify the trend both short term and long term, and when the two match up, well, then that's going to be the ideal trade as far as that trend. So go to our next basic step, which is our bounce levels. So there are certain levels in the market in which you will see on your chart that the market will literally bounce off of those levels. And I'll show you what I mean here. So let's go ahead and get rid of, actually no, we'll just leave those on there. To identify your bounce levels, you're going to use this tool here, the horizontal line. Let's go ahead and look at a 1 hour chart, and we'll go ahead and zoom out a little bit. Alright, so bounce levels. There are places in the market where you can see where the market literally bounces. I'll show you here. Can you see right here? The market as it approaches this level, looks like about 1.3559, the market bounces. So as it comes to this line like a ball on a wall, it literally bounces. You can see it did it again here. Bounced going up. Now, on the flip side, look here. The market bounced in the opposite direction. As it approached it, it bounced downwards. Okay. Let's draw another one. Let's see here. Let's look right here. You can see as the market approached this level, it bounced and went down. Again, multiple bounces here until it finally burst through. And then after it burst through, as it came back, it bounced again, this time in the other direction. Looking back here, you can see how it bounces there. Bounce, bounce, bounce. So there are different levels in the market in which the market will bounce. Let's do another one. Okay, look right here. Okay, a good bounce level is going to be where the market has multiple bounces. So this represents a good one. For whatever reason, the market has a hard time bursting through this level. So as it approaches it, it bounces multiple times there. So that's a good bounce level. Let's see. Let's look at another one. Let's draw some more here. Okay, here's a good level. You can see right here, as the market approached this level, it bounced a little bit and then broke through. And then on its way back down, it bounced a little bit and broke through. Okay, look at it here. After it broke through, it bounced on it. Got a little bounce here. Okay, so very simple, using your horizontal line. Here's another one right here. Look how the market has bounced. As it approaches it, it bounces off that level. Okay. Let's go ahead and just draw one more. I like this one right in here. Okay. You can see right here the market did burst through, but it bounced right back. And then down here you can see quite a few bounces here. Let's zoom in so you can see this. Look at this bounce here, and even right here bouncing. So, excuse me, right here. Look at all these bounces in this line here. So that's a good bounce level. So very basic. Let's go on to the next, which is our channels. Okay, the market will often have short and long-term channels in which the market will stay within particular boundaries of. Okay. The tool that we use is this linear regression tool that we've already used to identify the trend. So let's go ahead. Again, you find it, go into Insert Channel, Linear Regression. Okay, let's do one from this. Again, always going from a low or a high. So let's use this low here, and we'll just hold and click. You can see, if we were trading during this time frame here, let's zoom in. If we were just using our basic linear regression tool, you can see how the market stays within this channel. And so as the market approaches these top and bottom levels, it basically acts as similar to a bounce. So as the market approaches this top level, it kind of bounces off of it. Again, up here in the bottom, it bounces there. Let's look at the other ones we've already drawn. Zoom in a little bit. Okay. Look how the market stays within this channel. And as the market approaches the bottom, again, it's like a bounce. It bounces. As it approaches the top, it bounces. As it approaches the bottom, it bounces. Okay? Very simple.